Good morning, guys. Good morning, good morning, good morning. Let me share my screen. How's everybody doing? Somebody give me a sound check. How's my sound? Everybody good? Greg, good morning. Screen is good. Everybody seeing the screen? Actually, I guess you're not seeing the screen. Let me see. What's going on my screen? Really? Well, then where's my Zoom? What's going on here? Oh, here it is. Okay. Okay. I moved it around. I'm like, where's my screen? Okay. Awesome. Ooh, look at these collapses, man. Good morning, everybody. Good morning, good morning. I'm going to let everybody just kind of crawl in for a second before we start. To answer Miguel's question, you do not need combo on the charts now because the fade and the trend fade make up the bands, the moving average bands. So we really don't need that. I took the combo off. Okay. Now, let's do something. First of all, let's. I'm just going to take the fade off because I want to show you what I think is the more intelligent trade here. Okay, so let's see, everybody's in the room, right? Okay, why is this thing? Okay, I wonder if I could annotate this. Let me see what this does on my annotation. What can I do? Draw lines. Let me see if this is visible. Oh, this is this way. Delete. Can I do the delete? Erase, clear all drawings. Okay, let me see if I can do it this way. Draw. So maybe it's this way. No, damn it. Sorry, I'm just practicing something here, guys. So nothing's going on, anyways. We're definitely clearly selling off into the open hardcore here. Let me see if I can do this. So it's draw. Oh, this way. Okay, so it points this way towards this. Can I rotate this? Clear my drawings, clear all drawings. Spotlight, what does spotlight do? Okay, that's spotlight, clear all drawings. What does spotlight do over here like this? Spotlight's this. Okay, clear all drawings. What does a stamp do? Okay, I kind of like this. I think I'm gonna use this. Okay, all right. You guys having fun with all my little doodles here? Okay, so ready to roll. I've had a very good morning so far, and I'll explain to you why. So essentially, in my opinion, the best way for us to trade this most efficiently, and obviously I'm looking at the 1 minute chart, but this works on any chart and any instrument in the highest probability way, is to just focus on the trend signals, for now, right? So the classic setup is trend. They will only show up obviously when it's below the 200 period SMA or EMA, and you sell the trends, and I sell my trends with a 25 target, and obviously you're not going to get all of them unless you're doing it manually. In other words, you can sell this trend, as long as you get a signal, you just basically sell trend, which means you're going to be very heavy in a position. You'll be like 4 large, I think, or 3 large before they start hitting targets, which is one way of doing it. Or you could do it where you simply sell one and let it complete, then sell another one, let it complete before before proceeding on to the next trade. If you do sort of a one complete, then you basically today, right now, you had winner. Let me see, what was, I think this was what, 29 down to, oh yeah, I mean the winner. So 1, 2, 3, 4, 5, 6, 7, right? And effectively, really, when you think about this, what we are basically betting on, we're betting on a very, very simple idea that against a bigger time frame trend, like a 200 period trend, right? As long as we have some continuity, right? We'll have multiple trades in the direction of the trend at relatively optimal points, because we're always selling sort of at the highs of a mini retrace. So basically, we're selling at the highs of mini retrace, right? And as long as we give it ample room to trade against us, as long as we give it lots of ample room to trade against us, the trend reestablishes itself and and works in its own favor. So works this way. The point being is that you basically assuming that for every relatively large period trend slice, you'll have maybe 8 to 10 opportunities, and you're hoping that only one, at worst, 2 of those opportunities are going to retrace so badly against you they're going to stop you out, right? That's essentially it in a nutshell, right? That's the thesis in a nutshell and how it works. And obviously, I think it works pretty well. Oh, I can't. I got to go back to my mouse. Sorry. Okay, I got to go mouse. No, what the hell? Can I stop? Can I stop drawing? How do I do this? Oh man, what am I doing? I don't want to scream. I don't want to annotate. Okay, does this go? Yeah. Okay. Here we go. Okay. Oh, you know what? Sorry. Let me just erase all this stuff. Clear all drawings. I want to go mouse. Is that right? No. Why is this not doing it? All right. I really have to learn how to do this properly. Anyways, you get my idea on let's just take a look sort of at a bigger picture, right? So here's a bigger picture. We have upward trend developing in Asia and Europe. So winner. I think this is winner. Maybe this is not winner. I think this is not winner. It's kind of it's a loser, but it's only one loser because all of these, if you sort of stay to one trade per cycle, this trade just sort of dies out. All these multiple trades are effectively at the same point. So if you're only doing just one trade per cycle, so you have winner, 3 winners, 1 loser, winner. I think loser here. If you traded over here, it kind of died out on you again. Although, yeah, this is what this would be a winner here, 7-14, right? So you didn't have as good a session from. This is actually like 1 o'clock Asia, right? Before that, in early Asia, you had an excellent session. You had like sort of all winners galore all the way through here. Winner. Was this a winner? I'm not sure. I think so. You survive the retrace. You're in the 50s. Comes back down to 43, and you go to 63. So you survive the retraces. And then survive the retraces, make a few months. So here you had like basically 6 or 7 winners. Here you had about 6 winners against 2 losers. If you sort of just do it, on a gross basis, let's say you had like 12 winners, 2 losers, 14 trades all in all, and then you just sort of had like a very, very good run here. As a matter of fact, we're having a sell signal possibly showing up. We have to just kind of, I mean, we definitely have a sell signal, which have to wait for it to complete on the cycle, and we're going to try and take that trade. So you had, let me see, 1, 2, 3, 4, 5, 6, 7 straight up winners. So you can see sort of like, out of 20 trades, you're only at around 2 losers. This is interesting. So we got like about 18, 19 seconds to go. Let's see. I'll zoom in onto this trade a little bit, so we have a good idea where we're at. It's really spiking hard. 259s, and it comes in, and we make the money. It totally, banked us like super fast. I mean, this is super fast. It was just almost too fast for anybody to kind of take advantage of it. But another winner. If you're sort of in the trade now, you can take it now because it continues to retrace against you. Peter, the 200 period SMA you have to put on manually. Okay, I have it manual. It's not meant to show up. Just simply add it. Okay, I just add it as a thing. So you get, you sort of get. I mean, sort of the broad thesis of the trade is that within a longer term period trend, there'll be multiple retraces. We're going to try and take advantage of those multiple traces by sort of positioning ourselves at the best possible price point that we can come in on, and that's going to give us that sort of a 20 winners, 2 losers type of a time frame. And remember, we're trading 520, so that's effectively just sort of like in a best case scenario, you had 20 winners times 5 minus 40. You basically had 60 points of NASDAQ trades over a 12-hour cycle, which is tremendous. So I just wanted to run all of that by you to give you to give you a clear idea. As a matter of fact, I wonder if, let me just see if I could show this to you physically. I want to go the other way. Hang on, let me just see if I can show this to you physically the other way. Yeah, I think I can. So let me just show you. So this is, just again my experimental account, and you can see just sort of, this is all the selling winners. This is me screwing around. This is me getting clipped. This is what it was. I'm trading 2 contracts, so you're going to get clipped, obviously, and just a few more stuff, just a little bit of back and forth. But overall, it's just a very clean day on a 2 contract basis, very smooth, with me basically screwing around a lot. If I didn't take there's a couple of those losses were just pure, what I call F around losses. But you get the principle, right? I mean, you get the principle. What I think is the strong trade, which is just a trend fade trade. Is everybody with me on that point? Does anybody have any questions on the strong trend trade? By the way, look at this. This thing. I don't know if Karen or anybody else milked this thing, but it was a lot more than 5 points. I just it was actually about 20 points here. So that's the trend fade indicator. Then, if we look at the fade indicator, I think the fade indicator, in my opinion, really doesn't. I've actually ran a lot of the back tests because we've I've had Daniel, we've algified this thing, and the fade indicator does not across multiple currency pairs does not really add very much profitability in a trend-based environment. In other words, you're only going to take fade signals within like fade longs in a uptrend, or fade shorts in a downtrend, right? Which seems like that would be a really good idea to just kind of sell the fades over here, or sell the fades over here, or buy the fades over here. But it actually doesn't do a lot because honestly, like sort of when something turns green in a downtrend, like sort of the micro trend turns green in a downtrend, right? Quite a lot of times that green trend is um, uh, that green trend is actually showing you a turn in a major trend. Like the major trend might be turning positive, right? So when you're trying to fade those moves, you're not doing yourself a lot of favor. So to me, I think the fade indicator, which I'm going to just add right now, is a lot more interesting um, on its on its own as a um, as a fade component. Now, what I'm going to do is I'm going to go into settings. I'm going to lift filtered. I'm just going to say, let's just make it long only because we're in a downtrend right now. And what I want to do is I actually want to make it. The other thing you want to do is you want to make it harder for it to show up because the whole idea is fade requires even greater filtering, right? Like it requires greater. I'm looking at. I want to see 5 down, down arrows or lower lows before I would consider a possible fade signal. Because especially when you're in a big downtrend, remember, um, fade is only going to work really well um, in a environment where there's relatively shallow declines and the plateaus and slight retraces. When we have just a one-way trend situation, you want to have as few fade ideas as possible because those bounces are going to be much harder to do. So if you're trading, and the other thing is about fade that I think is really important is fade is very minimal in its if you're going for 5 on a trend side, I think on the fade side, you really have to go for like 3 or maybe even 2.5. In other words, the amount of bounce that you would get out of a fade signal would be half to I don't know 60%. Let's just say it's 60% of a trend signal. So let's just say 60%. So you want to go 3, right? So if we're going, 5 520, then we want to go 312, maybe even 310. Let's say 312, just for argument's sake. So if we go 312, right, and we get long over here, this is what? This is 75, right? We're over here at 75, right? This comes down all the way down to 65. We survive the 12s, comes back up to 78. We make our 3. Same thing over here. We got the fade. You easily make the 3 here. This one, I think, actually clips us, right? We eat this one. This goes because it's a sharp trend. And this one, we barely, I think, here's the fade comes down over here. Now, it's at 46. So we certainly make the 3. So on this particular very, very steep decline, fade, it really hasn't done us much favors, but it hasn't really lost us a lot of money either. And the value of trading fade is that if you don't happen to have a very, very sharp declining market like you do now, or if that sharp declining market is going to start to turn, then you could offset some of the losses that you have in your sales because the trend is going to stop can be offset. It's basically a diversification component. You basically diversify your scalping by seeing if you could make a little bit of money on the fade side. And you obviously take the risk of losing a little bit of money here, but there's not much of a loss. At very worst here, you're down 3 points on the fade side, whereas you're up literally 5, 10, 15, 20, 25, 30, 35 points, right? So if you're up 35 points on the trend side, just down 3 points on the fade side, that's a very, very comfortable risk reward ratio that I'm more than happy to live with, right? And it's just basically an offsetting. I think the fade is much more of an offsetting strategy than it is a true generation strategy, for itself. And just like here, it gives you a little bit of a positive. It adds, when you've lost like the 20 here, so you had 1, 2, 3, 4, 5. 1 loss, right? So 5-1 loss, so that's 25 against 20. So you plus 5, but then you add another 3 points, so you plus 8. Then you another plus 10, and you see how the fade just sort of adds to your overall trend total by doing that. And helping you. Here's it adds a little bit here, even though this is really underneath here as a thing here. Where's my fade buy? Here's an additional fade buy. So like this one loses for you. All of these win for you. This one loses for you, and this one just offsets a little bit of that loss, which is what you really want. You just want those little helping hands on the fade side. And if I am I'm just doing one side only. Oh, calm down. Sorry, my guys are here. So you can also, Bowie, stop. You can also see that in a very, very sharp trend, your trend signals are all going to work. They're all going to work. And the fades, some of the fades are going to get stopped. So like this fade over here, this is a 59 over here. That's going to get stuffed. But I think this one, and sorry, the other thing I was going to say is, this is kind of really important, is you want the fade candle, like if you're fading this, you really want the fade candle to be the opposite. Like you want it to be the best possible price. You don't want to take it on the red. You'd want to take it on the green. So if you take it on the green, like here it's a green, you just get stopped out. Here it's a red. You wait for the next green candle, like afterwards, to trade it. And if you took it over here, you made your point. Here's a red candle. You wait for the green candle. Then you make money. Here's a red candle on the red. I think it's maybe not. This one is a green candle, so you could sort of survive this because you're here at 11. It goes up to like 16, comes back down to 2. So you certainly make some fade moves. Even here, this little fade accretion still makes you money, because I think you're coming in at 12. You have a 20. 24 is your stop, and actually over here you make the money. You don't even have to worry about the retrace. You have a big dip over here. Now, if you're trading this on a CFD basis, you're obviously can trade in one account, one against the other. If you're trading in a futures, you have to trade it in 2 accounts because you're going to have offsetting positions. But it's just, to me, the fade is a complementary strategy to the dominant strategy. And yeah, there will be periods of time where nothing is working and where the complementary only ruins your performance instead of helping your performance. I wish it could always work. But the point is that on a 50-50 basis, it'll be at least 70 to 80%, 70-80% of the time it'll be complementary to you, right? And that's what's important. Just even in this kind of a structure where you have, okay, you get stopped on one, so 1, 2, 3, 4, 5, 6, 7. I think you even make money on this one, right? This is 37, 41. Yeah, you even make money on this one at 34. So like you have 8 positives against 1 negative, which is, 8 times 3 is 24 against 12. So you have like net 12 points on the fade side, and obviously you have like more than 20 points on the trend side. And together you now have 30 points from the end of the New York session, or basically 1500 hours New York, until like 8 o'clock at night. Like it's just, this is a 5-hour time frame. And if you're trading both sides of the market intelligently, you're like at 20, 30 points on NASDAQ, which is huge. And I think that's kind of, you have to look at it. It's both a way to trade a slice of time or session of time, and a way to trade both sides of the market intelligently. Does that make sense to everybody? I think this is sort of like the best of both worlds that I can show you. Because if we add the fade component to it, it really does not help us much on the trend, and it actually endangers us. And it's also, if you think about it logically, it's much better to to fade the moves against the trend, because that's really the function of the fade move, versus the let me just go long and short. If you go long and short in the signal instead of filtered, you'll get both. You get both sides of the equation. And as I said, it's a complementary strategy. So you kind of have like one account that trades trend, the other account that just complements with fade. And I think you have to experiment, especially on the instrument, and what you have as to what the proper. I still think the pay. You really can't get away with any of these trades. You can't get away with anything but like 1 to 4 risk reward. But how much of a reward you want to get, whether it's 3 points, 5 points, 4 points, is really contingent on the volatility of the instrument. I think with Nasdaq, you certainly have the point being is you really want to be like what you want to be in a perfect world is 90% on your trend trades, 90% on your fade trades, right? That's where you want to be. If you are 90% of both trades with that risk reward ratio, you are accretive, you are net positive to yourself on both sides of the market. But I also think it's good to trade this way because you're really not, you're very dispassionate at that point. You're not really emotionally engaged with one side or the other side. And if one side starts to really kind of not work, at least you have both the financial and emotional solace of the other side working. But I think by being dispassionate, you're just looking for the best possible entries on both sides of the market. So make sense, guys? What's cool is that we can, the algo that we have, you can literally program it. You can program 2 versions of it. So you can program the trend version, and then you can program the counter trend version. And whether you have 1 account or 2 accounts, they will just complement. They will just take those complementary trades one way or the other, which will be very very attractive. Like you don't have to just like a monkey keep banging them away. But that's sort of to me, that the whole fade overlay is a secondary component to just the pure idea of like, hey, let's trade trend at the best possible entries with the most possible room for performance, and let's just stay consistent to that idea. Just doing that alone is a winning strategy. I mean, we do this every freaking day in our class, and you can see that there's just so many times outside of class when this is all working. Let's just take a look. I've been blabbing away here. Let's just take a look if there's anything setting up on. There's plenty of instruments here. Well, this was beforehand. The Dow is gave us a signal as well. Right now, Dow is giving us a fade buy, right? A fade buy. And remember, I said that like it's got to be if we're using 10 points on the trend, then with the Dow we should be using 5 on the fade. Meaning, so if this comes in, just like we're gonna just play this just for a little bit. It's 27 long, looking for just 32. We're gonna just look for 32. We're just gonna look for 32. See if we can get that pop out of the Dow. Only because, and there we go, and that gets done. Only because, like I said, and I think with a Dow, obviously you may get more, and you could try to squeeze it out. But the whole idea here is, again, complementary data sets. Just bouncing off of a fade against trend is going to be a much weaker bounce than continuing in trend on a deeper a sell-off trend kind of a thing, right? And so the other thing I was going to say is, yeah, you certainly want to, and then you see, like, now you snooze, you lose. If you don't take that 5-10 points, you just it's all going to go against you. But what you certainly want, and by the way, I have a 5 setting, just so you know, it's a different setting. It's a harsher setting on the fade than it is on the trend. You certainly want to be buying only on a red candle. So if this was a green candle, I would have waited until this candle to come in long. You only want to be buying it at super lows, on the downside or super highs on the upside. Like I don't want to be buying on a green candle on a fade signal, right? So like here, this was a red candle on a fade signal that worked, right? Here's a green candle on a fade signal. No, I don't want to be buying on this candle. I'll buy over here. I'll buy on this red candle, which is 67. It goes against me down to 59, which is more than if I'm trading 520, I have a 47 stop, and I certainly make my 5 points up here on the reversal. So just all those little tricks of the trade you need to keep in mind when you're trading it. Is that clear, guys? Let's look at the look at the German. I haven't even looked at the German today. German was in a super strong uptrend. Now it's just in a completely super strong downtrend. And we had the same kind of a thing in the German where if you bought here at 70, you were looking for 75, it totally popped for you for 75. And then the trend over here at 79 certainly gave you another 10 points to the downside. So you had winning trades both ways on the strategy as it completed. So I just didn't get a chance to do the German. We starting the countdown. I'm actually curious. I wonder. This seems like a really. I mean, it looks worse. It looks just worse on a 1 minute chart than it is. It's only down 20 basis points. But let's say the Dow sells off hard here. So this is 1, 2, 3. If this one comes in, makes fresh lows, then we might have a. I'm just seeing 3. So now I'm hoping that we get a 5 consecutive lows. Look at that collapse. Wow, Jesus. Oof. So where's my count? This would be 1, 2, 3. I need 2 more lower lows for the count to complete, which I may not get because it was really hard sell off. But if I get another fade buy, I would definitely want to try and do it. It's really so 1. So let's see, we get a little bit more. Yes. So this is 4. Almost tempted. Because it's just been such a swan dive here, but I really want to wait till the 5th signal. If we get a 5th signal on a fade buy, and remember, if the 5th signal is a green candle, we'll wait till we get a red candle to enter it. So we'll just watch this for a second. So it's 1, 2, 3, 4. We got to break the 40s to start printing a fade buy, but we'll see if that happens. Yeah. Ooh, how come it's not printing? 1. What's going on over here? 1. Why is this not printing? Oh, there it is. It's finally starting to print. Okay. So we're gonna wait. If this turns green, we won't go for it because we really want. I mean, as tempting as this is, and I do think the green would work here. We just we want to stay to our idea that we really want to buy on the on the red discount. So turn green. If you want to take the trade, I think it certainly works. I know, and I had a feeling it would work. But let's just this worked on a green, which would be against our rules. But let's be patient. Let's see if we can get a red candle in the next one or two structures as kind of like the final sell-off, which we can pick up cheap and see if we can get a bounce, just to see if that would have been a better probability trade. Because obviously this is so grossly oversold that the bounce was due, but we still really want to ideally buy into the selling pressure. So if you had bought this, you certainly had 5 points. It was a 53, went all the way up to 66 on the upside. So let's see if I can get a red candle here. I'm not sure, but we've had, the point is that we had so much selling that we could have a nice clean rally here before they kind of peter out, but we'll see. And of course, this is gonna eventually start printing. I mean, if this goes 4 higher highs, it's going to print a sell signal for us very, very deep in the oversold territory. So I'm not so sure I'm going to love that sell signal, but and that's what makes it, this setup kind of interesting and challenging. It's when it's so pulled away from the extremes, from the moving averages, that a lot of the principles that we operate on start to get wobbly because so much of it is already factored into the price. Let's see. So this is now a trend signal, very, very deep in the oversold territory. And if it stays, we kind of we have to take it if we want to stay true to our setup, but fully cognizant that this is one of those things that could stop us. If we get a V-shaped recovery, it could certainly stop us out. But I think it's still going to be worthwhile for us to see if we can trade it. Okay, we're in at 76. And I'm actually going to try both. I'm going to trade both sides of the market because if this comes in red, I'll be a buyer as well. So because we're so far stretched away, it's clear that we're trying to V-shape towards the moving averages, but we obviously give ourselves ample room here with be like 16 is the stop, which it may get hit because it's so far away. As I said, that was a risk here, but we'll play both sides if we can. Just want to see what the DAX is doing. No signals on the DAX. NASDAQ's got nothing. This is a quite long count from the fade. It's like 4 or 5 candles from the fade, but I can't even get the red. It's just a straight up V shape. I can't even get the buy on the reds here. So I'm gonna get along here at 987 actually, 87 for like a 92 pop if I can get it on the reds. If I don't, then my fade move is just gonna die on me. And so now we're back in the money on the short side, and um, 66 would be my target on the short side. Let's see if we can get that. There we go. So the short side worked, the trend trade worked. Um, and I guess we're gonna just eat the fade trade here at 70. We'll just take the minus 15. So plus 10 minus 15, just because the fade was kind of a hedge against that. The hedge was far. It was just too far away, which is fine. Um, but that's a way. That's a way to kind of strategically trade the market, because in this case the market just ran through our target. Well, kind of because there was a massive V-shaped move. We had to give it a lot of time to absorb it. We tried to hedge a little bit on the dip side. The clean trade would have been just to have taken this and then taken that, but this would have been, as I said, against our principles. Even though, frankly, it was so grossly sold off hard here that this is an exception of where buying the green candle would have been a good idea. But it's still like the bottom line is there was very little. There's very little harm done here, because we still made the money on the trend side. Whatever we lost on the fade side was small. And again, you do this over and over again during the day. You're fine. I mean, if you were sort of patient enough to say I'm going to hold my fade, you're break even now. So you would have been, you would have had just pure plus 10 on the trend, and the fade would have worked for you. Um, let's see if anything else is developing. It seems to be like a very quiet, very quiet session here. We are in a downtrend. We got 1, 2, 3. Although this now turns into an uptrend, the micro trend, right? Micro trend is turning green, so we're not going to get any sell signals here, which is what we want. This is the beautiful thing about it, is once it's turning green, you don't want to be like, you don't know, like, yes, here would have worked, but a lot of times, how many times have we seen where the micro trend turns green and turns into a V-shaped recovery? You don't need to take additional trades at a riskier point. It's much better to just simply let them be. If anything, you might consider doing a fade trade here, on the sell side if you really wanted to. Or you could just simply say, I'm only going to do fade trades against the major trend, which would be the buy trades, as a complement, not as an additional point generator, not as additional alpha generator for myself. There's still nothing better than NASDAQ. I don't know what people like with that. Dow is just such a choppy little market. Trying to see if there's anything going on in the DAX. DAX actually, let me see, 1, 2, 3. If this candle goes high, that's going to trigger a trend sell for us in the DAX. It needs to get higher. DAX is so slow, man. It needs to get like 67, 68, and then it should give us a trend sell, I think. No, actually it doesn't, because this one is lower. It's starting a whole new count. You see this high that didn't quite make it. So which is just as well. Let's see what the NAS is doing. NAS has a 1, 2, 3, but now it's in a positive micro trend. So you're not going to get any trend sell signals. You're only going to get fade sell signals, and that would require full 5 candles of up moving, which I would have no problem shorting it there if I could get 5 consecutive candles up, because that's a big extension against a very still steep downtrend. And it's like a reasonable risk. So we have 1, 2, 3, 4. Let's see if we're going to get any kind of movement here. So when this candle completes and the next candle goes higher, that gives us a fade sell signal. But again, remember, like on the fades, we also want to make sure that it's higher and green, right? Not quite there. Hasn't broken the highs yet. Needs to go to like 60. There we go. I want the fade sell green. So it's got to stay green on this candle close for us to give it a pop, to give it a try. It doesn't quite happen. So now let's see if the next candle holds the green. We'll try the next candle if it holds it. If it doesn't, then then we just missed the turn. There's nothing you can do. It always looks really easy in retrospect, but you really want to try and sell off the highest value. So yeah, that would have worked, but it's just not quite 100% in sync with our rules. We're trying to make the rules hard, precisely so we don't fall for weak entries. But now that's it. It looks like it's totally turned. Unfortunately, that one just missed. Had it just stayed in the 60s, would have had a great trade here. It would have been like a full 10-point trade up to the downside. But but now it's an even money bet. I mean, if this goes hard 60, like 61, 62, maybe we'll take a risk on this thing to the upside, because it's still, it's extended to the, it's had a big micro trend to the upside, but we're still essentially, well, NAS is actually up 40 basis points, but we're still overall on a longer term time frame negative trend. All right, so it's through the 60s. I want to give this candle a completion, and we'll take the punt on it if it stays at these levels, like high up here. Yeah, running away from us. Nope, I'm not going to take this trade. Just to, that was the move. And now, now it's really clearly starting to create a strong buy signal. It still sort of worked. I mean, I cheated for myself. I didn't want to call this out to you guys because I didn't think it's not really to spec, and it was a very, very speculative trade. I did sell it into the 63s just because I thought there was a little bit of a chance for a fake pullback. But this was just simply didn't quite set up 100% to our setup, so not really worth calling it out. And you can see that if you weren't quick to take it back, it's just going to start running away. There's a chance here that we may be finally starting to make a turn. I think it's hard to make a turn on price that's been selling off so hard right away. I think there's going to be a lot more consolidation on this price, but you can really see the price action both ways, just by looking at the fade and the trend sell signals. And I think that's nothing else. That's just an incredibly valuable tool to give you an idea of who's getting the upper hand control, and where you want to position yourself at the best possible price, given the upper hand control of how those things work. So let me see what else is going on here. Let's see what the Dow is doing. We missed. Sorry, guys. While I was yapping around, we missed the trend sell here, which was another good 10 points, easy 10 points on the Dow here. So I don't know if you guys, if anybody else was looking at it aside from me, but I got too absorbed with the Nasdaq. But again, just sort of like what I want you to see visually is you have the big trend, you have the retrace points, and you just sell those retrace points mercilessly until they stop working. And if that's really the whole strategy, just sell them until they stop working. Just like on the other side, you buy them until they stop working. And the idea here is, when the dust settles, all your winning sells are going to overwhelm your stop outs, and all your buying wins are going to overwhelm your stop outs as well. That's really basically the strategy in a nutshell. It's as simple as that. All right, it's not a bad power hour. We did make some money. I already forgot what my counts were. Like, I think for sure Nasdaq was like plus 10 at least. The Dow is probably like -5. We could have had another 10 in the Dow if I was paying attention to the trend sell, but I got sidetracked. But I think still pretty good session overall. You guys got the feel. Anybody else trade anything, like anything else that you guys did today aside from what I was calling out? There's another trend sell in the Dow at 201. Let's see if we can make 91 out of it. 92, good enough. We'll take 8. They're fine, Peter. They're an American regulated broker. There's no such thing as problems with funding and withdrawals. In America, everything is regulated. They're not allowed to fuck around with your money. But they're fine. Oh, by the way, it hit 91. So like if you held on for the 10, anybody trade that down, by the way? That was a nice clean trade. Karen, anybody? Connie? Yeah, okay. All right. But it's still, I'm still counting. That was a good trade. So actually, we just turned positive on the Dow for the day too. So we're again fully positive for the day. Excuse me, on all instruments, which is great. I think it just shows you the potential here. What is going on here? I want to see something. What's happening on the NAS? Oh, it's a fade sell. Oh, it's a fade sell. Yeah. Okay. Yeah, that was the fade sell that we got completely obsessed with. Okay, that was great. Okay. Yeah. Okay, guys, pretty good, right? Everybody good? Oh, you want to buy, made a profit? Oh, good for you. Oh, so you popped at 201? Karen, good for you. Nice. Yeah, that's another thing that's kind of interesting is if you're on the opposite side and you're getting the signal, there's a strong chance that's a near-term top or near-term bottom. Strong chance. So if you're on the opposite side of that, that's an excellent profit exit as well. Like if I mean, you actually gave me just sort of like an idea. It's a crazy idea, but like imagine this is actually a really cool idea, guys. Think about this. Trend sell to fade buy, right? Trend sell to fade buy, or trend sell over here to fade buy. Trend sell to fade buy. Trend sell over here. Well, you don't get a fade buy here. There's no fade buys. So here you would have had to sort of like had a big target or fade buy. But it's sort of interesting, right? You have a trend sell to fade buy. I'm just actually like, what if we go the other way around? Trend buy to fade sell. Trend buy to fade sell. You're getting, much more than just for like 77 to 09, right? Trend buy to fade sell over here. It's a short one. But it's kind of an interesting alternative way to think about trading. Thanks, Karen. You're always good for creative ideas. You can go the other way too, like if you were a fade like let's say you wanted to just you're not a trend person, you want to be a fade person. So there is an element of danger, I think, if you just get a run, like you'd have to put, I think, what I would call an emergency stop on these positions, but you could make them dynamic in a sense that here's a fade sell and you don't have any kind of a except for let's say an emergency stop of like 50 points, right? Emergency stop of 50 points, whatever. But you sell here and you buy here. Now that's actually basically brings you to break even, but that's sometimes doesn't work here. But like here, if you had a fade sell, that gives you a nice clean move here. Here's a fade sell over here. You are break even here, but if you fade sell it, like the way you, this is a very dangerous strategy, but it certainly would work. You would have to martingale into this with an emergency stop. Like kind of, you say to yourself, okay, I'm going, and you could even do it fully dynamic. You could say, I'm going to average in 2 times, and if I get a third time, third fade sell exit without a trend buy in between, I'm just going to stop myself out. So, boom, boom, winner, boom, boom, winner, boom, boom, winner on the fade side, which is kind of really, really cool, really, really interesting, right? If you're trading to the fade side, let's just try to look at, here's fade, boom, winner, another winner. Now I'm going to go the other way. Oh no, not the other way. I want to, so this is fade. I want to be, excuse me, fade, I want to trend selling. So fade buy, trend sell here. Fade buy here, fade, excuse me, fade buy here. This one stops me out. I'm just going to stop out, right? And then I don't have any fade buys here. But now I have like a fade sell. So like, let's say I want to do a fade sell against a trend buy now at this point, which will be interesting. Let's just, this actually just is going to work anyways. It's going to work for 5 points anyways, because it's so overextended. And another good compliment. But it's so cool. Like you could actually, we can use these points as dynamic entries. Like we can create a whole new strategy out of this thing that is much more flexible to the price action, where it's not just hardcore, I'm going to risk so many points, I'm going to make so many points and try to get a winning percentage. It can be a lot more dynamic with a reasonable exit, where like, okay, if I'm 3 strikes against me and I'm out, to use an American baseball metaphor, and boom, boom, I'm out. But if I had if I had another one entry, I would have been here and I would have been exit over here. You can actually make a lot more points because you're buying deep, undersold and selling deep oversold, right? It's kind of cool. What do you guys think about that? Everybody see what I'm talking about? Like kind of like, using the actual signals for both entry and exit instead of having hardcore, point stops on exit and entry. Or does everybody like not really care? Looks like everybody's just simply trading and they're just ignoring my rantings and ravings. Anyways, we are positive trend here. The green envelope has moved above the 200 SMA, which means that now we're going to be in the buy signals are going to be trend buy signals. They're going to start showing up as trend buy signals, and keep that in mind, because we the Nasdaq really turned very convincingly. All right, guys, we're a little bit over time. That was really a lot of fun. Great session. Hope everybody really enjoyed it. And I'll see everybody tomorrow for the power hour of Wednesday. Thank you, guys. Everybody have a great day. Bye-bye.